Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we'll take a look at the Canadian dollar, mostly because all that we would like to say we have said in weekly research on the euro currency. In relation to the euro currency, right now euro shows retracement that we have expected to see due to some reasons that we have discussed in our weekly research. So market right now stands in a minor bounce up, but this bounce just has started, and right now all markets just wait for Fed statement in the coming week, and that's why the market probably will be a bit lazy till the Fed statement will happen. And this comments from the Fed Reserve will press on the markets and will hold them for significant action. That's why probably we should not expect a really significant action on the markets. We suspect that Fed really could give the dovish comments currently, and it's really not big chances concerning the rate. But rate right now is the secondary object. The major object is the assessment of the overall situation in the United States economy. Since we see the signs of weakness across the board, so we see that China economy is chilling. The data is coming from the United States is not stable as it was, positively stable as it was just a half year ago. So right now it's mostly could call as the mixed data. So it's the positive numbers start turning by the negative numbers and so on. Just remember that non-farm payrolls last numbers. So that's why hardly Fed will encourage investors for rate hiking, and especially to some hiking rate cycle. That's why we think that the chances on the dovish comments are more significant, especially taking into consideration what Draghi has said recently. So if it really will be truth, for us, the major value of this dovish comment stands not in some strategical impact on the markets in the long-term perspective, where you have really more simple tasks. So if you remember from our research, we mostly expect a deep retracement on the euro currency for taking the short position. And particularly speaking, the dovish comments could trigger this deep retracement, because extreme volatility could come right in the moment of the comments. That could push euro high on these dovish comments, and this will let us to get the nice entry point for taking the short position. That's what about the euro. Right now on the Canadian dollar. On the Canadian dollar, as you can see, guys, market is still dripping in the direction of our target. That stands at 32.17 area. This is the minimum target for the bread body trade that we have on the weekly chart. Just few pips rest on this target. Speaking on the Fed comments in relation to Canadian dollar is also very, very important, because again, the dovish comments could trigger the starting action to the downside on the Canadian dollar. So Canadian dollar could start to increase value right at the dovish comments, and this particularly could happen right after market will hit this target. So bread body will be completed, and we could recall our trading plan for the Canadian. We trade this bread body, but we keep in mind that our long-term direction is down, because market here has hit the major target, and we expect some kind of the A, B, C top D retracement right to the 125 area or even lower. And here, guys, for a long-term perspective, we particularly watching for a good entry point for taking the short position. That's our next step in the Canadian dollar. Right now, we're just finishing with the trading of this bread and butter. So on the forward time frame chart, and the dovish comments from the Fed particularly could trigger this action to the downside. That's why, guys, it's very responsible moment for all currencies, and particularly the Fed meeting could trigger the action that we expect to see on different currencies. So on the 4-hour time frame chart, we probably could and should wait for a bit more extended target, because 132.17 is just the fib level and it's minimum target. It doesn't mean that market can't move slightly higher. And from that standpoint, by taking a look at the picture that we have on the 4-hour time frame chart, markets suggest reaching some high levels. Why? First of all, take a look at this ABCD pattern that based on this head and shoulders pattern that we have discussed. So ABC bottom. As you can see, market has hit 100% extension on Friday, and we said that probably market should show some minor retracement. It will retest the neckline. That has happened, and after that, probably it could continue move high, because the brand body target has not been achieved by this moment. And this really has happened. So you can see market retest the neckline and start move to the upside. Right now, market stands above the 100% extension, and the next logical targets. This next target will be 1618. It's 132, probably 75, somewhere in this area. Also, guys, this target coincides with the classical target of the head and shoulders. So if you will measure the distance between the bottom of the head to the neckline and clone it and count it to the upside in the direction of the breakout, right from the point of the breakout, you will get the target of the head and shoulders. This is the classical approach. This is from the books of the Murphy, of the Schwager, you will get this rules for the trading of the head and shoulders. And this particular stands at the same area. It coincides with the monthly pivot point. And finally, guys, this will be weekly pivot resistance one of the current week. So that will be nice resistance area. This market will complete this target retracement and will meet significant resistance. Also, guys, I probably would suggest that this will be daily overbought as well. We just need to replant this. Just let's see. Well, 32.98. So this will be overbought. It's right here, very close to the overbought. So market will move slightly higher. This will stand near overbought. So it seems that we should be watching for a bit higher level for short entry. Currently, guys, it's difficult to recognize any patterns here. Maybe 3 drive could be formed here. But maybe market will form something else. Maybe market will form here the butterfly or something of that sort. As soon as we will get the reversal pattern, this will become easier to estimate the reversal point and just will give us more confidence for taking short position. But based on the picture as it stands right now, we could make the 2 conclusions. First of all, we probably should be ready for a bit higher action, not to the 13.17, but slightly higher. And second, we should keep a close eye on the Fed comments, because Fed comments really high probability that will become dovish, and this particularly could trigger the bearish action on the Canadian dollar, so downside. I mean the Canadian dollar is in the currency pair, not the Canadian dollar directly. So it will be the bullish for a Canadian dollar directly, but the bearish for this United States dollar, Canadian dollar currency pair. So I suggest this downward action on the Fed comments. So that's our view on the current situation.